Hey, what's up, guys? Welcome to the Texas Mortgage Boss podcast. I am your host, James J., and today we are finalizing our 8-video series over the last 4 weeks. And I've given a lot of videos and tips for first-time home buyers specifically is what this video series has been targeting. Today, we are going to go over the difference between APR versus interest rate. APR versus interest rate. This is one of those things that gets a little confusing for first-time buyers and honestly, people who have owned homes before or purchased anything on financing. You've seen APR. All right. Now, what does it mean? What does that mean as it relates to mortgages? Okay, so let's look at this. So APR is annual percentage rate. Okay, what that means is we're going to take all the costs associated with you getting a mortgage. Okay, all the costs associated with you getting a mortgage. Okay, what type of costs are we talking about? Origination fees, prepaid interest, broker fees, mortgage insurance, and any other closing costs that are associated, including the interest rate, the costs associated with getting the mortgage. Okay, that is what the APR is. APR is also kind of a way for consumers to compare if they're shopping. Okay, so lender A says, hey, I can get you an interest rate of 3%. Lender B says, hey, I can get you an interest rate of 2.875%. Okay. Well, if you look at the APR, that is a kind of a quick way to understand, yes, this lender is getting me, an interest rate of 2.875, but my APR is 5.3 versus this lender over here. Yes, their interest rate's at 3%, but my APR is at, 4.625. Okay. It's just a kind of a quick, easy way for consumers to look and be able to compare APR, which is the cost of getting the loan. So for example, there's lenders that's giving you 2.875. Yeah, you might be getting that rate. However, they're charging you discount points to get it. And sometimes lenders don't even tell you about this. They just do it. So you got to really look at that. Don't just look at interest rates and say, it's apples to apples. You got to look at that APR as well and understand one lender may be charging you more to get the exact same rate as another lender. So APR, very, very important that you look at that and know what it is. Now, the interest rate, on the other hand, is simply maybe the monthly cost of you actually having the cost of getting the mortgage. Okay. On a monthly basis, your monthly payment is based on the interest rate. So everybody wants the lowest interest rate. I do too. I understand. Your interest rate is going to be affected largely by your credit score. And the next thing is going to be your down payment. And then the loan type. Okay, so we did a video a few weeks back talking about the differences with the different loan types and credit scoring, things like that. Okay, FHA, much more lenient, than a conventional loan. If you're a veteran, VA loan, definitely the way to go. As long as you qualify for it. And just because you are a veteran does not mean you automatically get a VA loan. Okay, you still have to have the financial ability to repay a loan. Okay, I'm bringing this up because I've had veterans think just because they're a veteran they can get a loan. No, you have to qualify for the loan. You have to have the ability to pay back the loan. So the interest rate is what's going to have the biggest impact on your monthly payment. And that is what people are focused on more so than anything else. What is the interest rate? What is the interest rate? In this market, you got to be worried about getting a home under contract first because you can't lock the interest rate until you have a home under contract. So I would focus more on getting the home because that is not an easy thing to do in the market we're in right now. Focus on that, and then we can focus on getting you the best interest rate possible. But just know your credit score has a lot to do with it. And your down payment. That is really what's going to affect your interest rate. So that is the difference between APR versus interest rate. There's a very short clip or short explanation of what it is, but in a nutshell, APR, cost of getting the loan. Okay. It's annualized as a percentage, and it's a quick way for you to look and be able to compare what lender A is telling you versus lender B. Okay. Interest rate, that's what your monthly payment is largely based on. It's going to be based on the interest rate. And again, I know everybody wants the lowest interest rate. I want the lowest interest rate as well. I don't blame anybody, but just know things change. Interest rates change. They don't stay the same. Okay. Just keep that in mind. Your interest rate, super important. But you getting into a home, even if the interest rate starts to go up higher to 4% or 5% or whatever we get to in the future, it's still better than you renting a home. All right, that's it for today, guys. Please go visit TexasMortgageBoss.com. There's more information there, and share this video series with a first-time home buyer. Again, the goal, 10 people for the month of May. 10 people. All right, that is the goal, and I will continue to provide more video content. Anything that I can provide to help you. If you've got questions, send me a DM, or again, go check out TexasMortgageBoss.com. I will see you guys.